You are listening to chartingwealth.com for Thursday, the 19th of May, 2016. Another week is flying by. Well, we jump into the market looking at what happened as things closed on the 18th, Wednesday. What do we actually see going on? Well, the total market was up 0.05% now. That's 0.5%. So that is not a lot of up movement. It's a little bit. So it is an up day versus a down day, but not much. When we look at our two-day candle, what do we see? We still see a red down candle. In fact, derivative oscillator heated up in its energy, and the MACD got further from the signal line on the down move that started on the 28th of April. So we have a red down candle, a lot longer wick going down than we do the wick on top. So again, still much more down pressure. If we look at our 4-hour chart, what do we see? We see a spinning top at the end of the day, crossed over as we talked about yesterday. When I say yesterday, I'm sorry, actually the 18th, crossed over in the morning as far as any kind of trading purposes went. Hopefully some of you jumped into it on the 18th and have already seen that bearing some benefit to you. We did have a crossover going down back on the 13th. Some of you may have jumped in then. You did okay throughout the course of the day. There was a lot of down movement toward the end of the day. We do have the total market getting all the way down to $101.50 from somewhere where it closed around 102.16. So lots of volatility and movement in the market as the day was ending. We still have a green upward derivative oscillator, and we have confirmed down moves on the short chart as well as the large chart, and we are below our 2-day trend line. Everything is looking nice right now, but of course in the stock market, when it all looks nice, expect it to change. Now we're going to go over to SPY. What do we have going on there? Again, confirmed down moves, derivative oscillator heated up. The signal line and the MACD got farther apart. Red down candle, similar to what we saw in the total market. On the 4-hour chart, what do we see? A similar setup, down movement in the morning. Derivative oscillators continuing to heat up. Confirmed down move on the short chart. Hopefully some of you got in. Hopefully all of you got in on a down move on the S&P 500, which would mean you may have gone and purchased, say, SH, which is the ProShares inverse of the S&P 500. Hopefully you got in somewhere good, somewhere like 106 or so. And of course the market closed at did I say 106? 206. It closed at 204.91. So hopefully you got in somewhere in the evening on the 17th or the morning of the 18th. You may have even gotten in as far back as the morning of the third or the afternoon of the 13th when the market rolled over. So we shall see. Again, what we're doing, for those of you just learning how this works, we're trying to follow the big trend. And of course, the big trend is down. It is the 2-day chart, and it is down. We're continuing to monitor that, continuing to accelerate in its downward movement. We are trend following. We're letting the market roll over on a big chart and then back up on a small chart. Means it moves in the opposite direction. And then when it rolls back over in the same direction of the big move down in this case, that's when you look to jump in and ride the big wave. That is where we ended up on the S&P 500 as represented by SPY. Now lastly, for the record, the S&P 500 up 0.03%, so that's 0.3%. Now, you know what? Is that right, or is that 3/100ths? It's actually 3/100ths%. Yes, where we're going to next is the Qs, QQQ. That is up 0.36%. That's actually up 0.36, so that's right at a little over 0.3% up for the day. We still have a lot of indecision in the cues. What is going on? Derivative oscillators continuing to lose its energy. It started losing energy all the way back on the 2-day candle on the 10th, and it's really just been sliding sideways. We have the second doji. We've basically had either a spinning top or a doji for the last 3 candles. So lots of indecision in the cues right now. And even indecision in the indicators. Looks like we're not getting any closer on the MACD and the signal line, but the derivative oscillator is losing its energy, which would tend to make you think if it was going to pop, it might pop in the direction of up. If we look at the derivative oscillator, of course, losing that kind of energy. If we look at the Bollinger Bands, we see there's still plenty of area for a move up as well as a move down. So again, tough call there on the cues. What does that mean for us? It means we don't trade until we get a signal, right? What do we have going on the 4-hour chart? We still haven't crossed over going down, although it's losing a lot of its energy. But again, the short chart is simply a confirmation chart to move us in the confirmed direction of the big chart, which again is real iffy with the candlesticks right now. So again, where are we as far as the big chart goes? Confirmed down move on the big chart. So again, if we see the short chart roll over and start to go down, we could look at a down move on the cues. So continue to keep that in mind as best you can. Lastly, we go to GLD. What is that? That is gold, and it crossed over going down on the candle that we are currently looking at on the 18th. There was a crossover on the 2-day chart. Gold is in a confirmed down move at this point. Now again, we want to see that candle finally close out. And in order to confirm that down move, we always want to see a candle close out. What do we have going on? We also saw, as everything occurred, actually the 4-hour chart and the 2-day chart crossed over going down at about the same time. We've had that happen in the past in gold, and typically it has been a sign of a good move if you are able to get in at that point. Whenever we have double moves of 2 charts at the same time, if you can find a good entry point, it can be a good time to get in, although it is so hard. The first real inkling of it came in the morning, confirmed truly in the afternoon. And of course, the problem at that point is, what do you have happening? Well, you've already had a gigantic surge down. Dropping into the bottom below the Bollinger Bands in a surge down can always be dangerous. You would have gotten all the way down to a low of 119.88, and of course the market closed. The last on the market was 120.83, so you would have lost $1 there. Typically, again, if you can find a good entry point, you're paying attention and watching the market, very hard to do, possible. What we prefer to do is wait until we see that down move confirmed later after a rollback. So again, no real trade, we're calling it in gold at this point. Continuing, like we said, to watch what's happening in the cues. And again, gold actually down for the day 1.73%. That's what caused that big crossover on both the short chart and the long chart. So let's wait for a rollback and then see if there's a possible inverse move in gold. And again, gold, just like our indexes, the Qs, the NASDAQ 100, and the SPY, the S&P 500, you also have inverse gold funds that actually go up when gold is going down. Now, we talk about a lot of things here on the program. We appreciate you being with us every day. We hope that you find all of this extremely helpful, that you're practicing every day like we're talking about all the time. We also are preparing, as per your request. I asked if having a sheet to keep up with the market each day for you to fill out as you listen to the podcast. It gives you a little bit of work to do. A worksheet as you're listening to the podcast would be helpful. You all said it would be. So we are working diligently on making that into a reality for you. Nothing better than keeping up with your handiwork as you move through the charts each day. We appreciate you being with us. We want to help you in every way we can to succeed. Please write us, email us, let us hear from you. You can follow us on Facebook, Twitter, Instagram, YouTube. Also go to our website, chartingwealth.com. Sign up for our newsletter. We appreciate you, and we thank you for all the kind things you've had to say about us. We also want to note that our latest podcast, the weekly review and forecast that we've started putting on iTunes under video, has already garnered several 5-star ratings and nice comments. We very much appreciate that. And we're under new and noteworthy. We just started putting that out about 3 weeks ago. So thank you for that. Big deal for us. We're also under business, under stock market. We are now number 7. We're in the top 10 for those iTunes broadcasts. And we so appreciate, again, all the kind things you've said about us and done for us. If you want to help and you appreciate what we do, you can do one great thing for us. That's go to iTunes, give us a 5-star rating, say something nice about us. Thank you so much. We do this for you, for the love of the market, and we so appreciate you being with us and all the great comments. Let us know what else we can do for you at chartingwealth.com.